Good evening, everybody. My name is Tom Dunn. I'm the Director of Business Solutions at TCIA, and I am pleased to introduce our speakers for tonight's webinar, Jonathan Bomer and Sue Boardman from Puzzle HR. I also wanted to mention, just as a reminder, that you can check out the COVID-19 page on tcia.org for the latest information on COVID-19. We do feel that there's going to likely be further instructions and corrections released by the SBA that I'm sure Sue and Jonathan will talk about in the coming weeks. And TCIA will continue to update our members with the latest relevant information. There is also a best practices document for tree care companies that provides guidance on reducing the risk of spreading COVID-19 in the workplace. So for this webinar, we will try to answer your questions as they come in, and Jonathan and Sue have offered to be contacted with your questions after the webinar, if that's okay, guys. And so with that, I'll turn it back over to Sue.
Well, thank you very much, Tom. And we're really thrilled to be able to present to your association. So we're looking forward to this evening. The way this will work is we have a lot of content to deliver to you this evening. But what makes it great is we want to keep the question and answers open for everyone to ask their question, because if you're thinking it, probably everybody else is too. But with a little housekeeping, at the bottom of your screen, you see a Q&A. That's where we would like you to pose your questions, and we will do our darndest to make sure we get to all of them. Next to that, you see a chat, and we would prefer you did not use chat with your questions. So please use the Q&A to get your questions answered. Ooh. One second, please. Tara? So as we're starting the webinar, we have to first always show this screen. I think you probably, from being on different webinars, I'm sure, have heard it over and over again, but we are not attorneys. This should not be considered legal advice. And what we're sharing with you is best HR practices and all things COVID-19 pertaining to the PPP loans and the loan forgiveness as it stands today. Tara? So with that, I'd like to have my partner, Jonathan, start off. And as questions come in, and I do encourage you to ask your questions, please put them in there. I'll stop Jonathan and as he's going through this, but he'll start right here talking about the PPP loan forgiveness application and then an overview.
Thanks, Sue, and Tom, it's great to be with you, and it's great to be with all of the members of the Tree Care Association that are joining us from coast to coast. Myself and Sue are both here in New England. We're headquarters in Tampa, where Tara is our marketing assistant. And for purposes of this webinar, we're going to try to keep it moving. We're going to try to keep it lively. And we do encourage your questions to come in that Q&A box. We support other associations. We've been doing, 8 to 10 weeks, Sue, of everything PPP, CARES Act, FFCRA. We support small businesses all over the country with everything related to, the complications with COVID. And first and foremost, we definitely want to extend, our deepest, feelings towards everybody who's been impacted by COVID-19, whether it's been through illness of a loved one, impact on your business economically and your family. This is obviously a very difficult time. While we're not all in the same boat together, we are definitely in the same storm, and we are looking to, come out of it stronger than we went in. A couple of background notes. Went to school in Washington, D.C., went to law school in Washington, D.C., and I'm a veteran of the United States Marine Corps, and I've been with Puzzle since the beginnings, was one of the co-founders, and have been in the business for 20 years working with Sue. For purposes of what we're going to review tonight, we're going to talk about the loan forgiveness application in particular, but we're going to hit some of the highlights in the notes of the PPP program in general. Couple of things to know. On Friday, we got this application. We've been voraciously trying to rip through it, and we were eagerly anticipating the final rule to come out for the PPP loan forgiveness. Instead, we got simply an application with instructions and worksheets. So here we go. We're going to hit some of the highlights. We'll just want you to know, borrowers, you must complete the lender PPP loan forgiveness application to obviously get your loan forgiven. Your loan forgiveness will come from your lender, or if your bank, if it's one and the same. And for purposes of processing the loan forgiveness, which, by the way, you don't actually have to get your loan forgiven. If you want to just keep the loan, you can certainly do that. They do want you to use it for the prescribed reasons, but it is a 1% loan with a 2-year maturity. So just keep that in mind. We're going to review some of the new updates and the options that the SBA brought more flexibility. And I will tell you, just as a general overview, this past week, the Inspector General, the United States Inspector General, did come out and was fairly harsh against the SBA administrator, and was speaking in terms of rules that were a little restrictive for small businesses. So in turn, we have some options that'll make it a little more flexible. One is how we were going to calculate the payroll costs. So we used to have just the covered period. Many of you may have read it, and now you'll see this alternative payroll covered period, the APCP, if you will, and that's going to align with your regularly scheduled payroll cycle. So a little bit of forgiveness and flexibility there for you. We also have the eligible payroll, keep the slide, eligible payroll and non-payroll expenses. There's now language that will say paid or incurred, and we're going to review what that means this evening. The loan forgiveness application does include step-by-step instructions. There's a couple of switchbacks you'll notice, a couple of referencing this worksheet and that worksheet. So just be mindful that as we work through our forgiveness application, be mindful of having everything at your fingertips just to make it a little bit easier for you. We have a new statutory exemption. We're going to cover the exemption, which is for you to have all of your FTEs hired by June 30th, and we'll cover that safe harbor. We're also going to cover the new FTE exception. So the exception should not be confused with the exemption. This is where we'll make a good faith written offer to rehire your workers, and if they decline, we'll get them removed from your loan forgiveness reduction. And then lastly, if your FTE headcount declines and we don't have the exception or the exemption in place, the loan forgiveness will be reduced by some factor. And still waiting to get some more information on exactly how they're going to use the FTE factor to reduce the loan. That's one part we don't necessarily have yet. Next slide.
Yeah. Do you want to get the questions that we got from that slide, Jonathan?
Why don't we keep going, because we're going to hit a lot of these points.
Okay.
So let's keep rolling.
All right.
The PPP loan forgiveness application does have the 4 components. You've got the calculation form. You've got what's called the Schedule A, which you'll complete. You'll use the Schedule A worksheet to complete the Schedule A. And then they've included a new optional PPP borrower demographic information form. And basically that's going to ask questions like, are you a veteran? What's your gender? What's your race, nationality, things like that. All borrowers will be required to submit 1 and 2. They're not required to submit 3 and 4. Okay?
Okay.
Next slide.
Yeah.
So one of the things that we're going to hit is the difference between the covered period and the alternative payroll covered period. So the covered period is what you not too long ago remembered was an 8-week period starting on the day the funds were dispersed and hit your bank account. That was day 1, as soon as they hit your bank account. And then for 56 days, on the 56th day, your 8-week period would elapse. They've since lessened that and loosened that to have an alternative covered period, which on the next slide would mean that if your funds hit on April 20th, the first day of your next pay period would actually begin your alternate payroll covered period to pick up all of your pay periods on your regular cycle. So instead of your your covered period going from April 20th to June 14th for 56 days, it would actually run for purposes of payroll April 26th to June 20th. This is going to apply to businesses who have more frequent frequencies. So if you have a biweekly frequency payroll or if you have a weekly frequency payroll, you can choose to use the alternate payroll covered period. And I'm going to say it again as the example. If your funds hit on April 20th, then that would ordinarily be the first day of your 8-week period. But if the first day of your next scheduled pay period, let's say started on April 26th, then your last day would move from June 14th to June 20th. So let's keep that in mind as we review tonight's information. Go back one slide. One thing we want to keep in mind is electing the APCP. If we use the APCP for purposes of payroll or payroll costs and forgiveness, we need to apply that wherever there's a reference to the covered period or the APCP. If there's no reference to the APCP on the loan forgiveness application, then we have to use the covered period of 56 days, the day our funds hit our bank accounts. Now, if that's confusing, I'm sure there might be a couple questions, and we'll definitely hit those.
And we do have a question pertaining to that I'd like to share. Okay. The new rule says you can include payroll costs and incurred. For us, received loan on April 11th using alternative payroll covered period, that effectively makes it a 5 biweekly payroll periods, 10 weeks rather than 4 8 weeks. Does that seem true?
Yes, and it's exactly that. So from purposes of paid and incurred, especially if at the end of your 8 weeks, if you do have incurred, which is basically your people have earned their pay, if it falls outside of the 56 days, we can grab that pay period and pay them as long as we pay them on that first regularly scheduled pay period. So yeah, essentially you're getting a little bit more time and flexibility to meet that 75% of payroll costs.
Okay, and then just one quick question. Are sick days eligible to be included in the PPP?
Sick days are eligible to be included in the PPP. Now, it's a little bit of a tricky question because you have the FFCRA and the E-sick and the EFMLA. So if a person is going out on emergency sick, and let's say it's for COVID, we're allowed to use the Social Security, the employer payroll tax portion of 6.2% as a dollar-for-dollar tax credit to pay for that. So we wouldn't use the PPP funds and the tax credit because that would be a double dipping. If you decide to use the PPP funds for sick, then we just need to not use the FFCRA tax credit under the E-sick and the EFMLA.
Great, thanks, Jonathan. Okay, Tara? Yeah.
So just a couple things. I don't know if everybody tonight has gotten a chance to see or review the application. Just a couple things to note. This is the instructions page. On the screen, it's a little bit hard to read. We're not going to go through everything about it. Just a couple of things to keep in mind as I've gone through the many iterations of this. Really read it carefully and pay a special mind to the definitions, especially in the one area where it talks about adding your total number of employees on the top of the application. And then later it starts to talk about using the FTE calculation. So make sure we take our time and read it carefully. There's two things that we really need to think about when it comes to our PPP loans and loan forgiveness. So there are things that you can do to take necessary precautions today to minimize the loan forgiveness reduction. Conversely, there are preparations we can put in place that'll maximize your loan forgiveness. It may be that some of us members are in a position where it's going to be very hard to meet 100% loan forgiveness. we are going to do everything we can to make sure that we maximize loan forgiveness and minimize loan forgiveness reduction. And, you know, we're presently involved with that with our clients all over the country. And then as you go through the instructions, I found it as a good practice, and I use this myself, to write down your questions and, you know, seek counsel, whether it's your accountant, whether it's a tax attorney, you know, whether it's your HR manager, whoever it's going to be. Make sure that you're getting those answers, the answers to your questions, because if you start it, especially if the lender puts the application in a digital form online, you may have to stop, and then you'll get timed out and it won't save it for you. So it could get frustrating if you have to stop and collect data or don't have everything at your fingertips. So just word to the wise, let's pull everything together and be prepared before we try to do the application. We have a short window to actually get it over to the bank so they can begin the process.
Jonathan, how long is that window at the end of their 56 days?
So it's a fairly short window, Sue. It's 10 days for us to be prepared and get our packet over to our lender. I will tell you, having been involved with this for, I guess, 10 weeks at this point, you know, if you were with some of the larger banks, the big banks, the mega banks, you may have experienced a lot of frustration. Had to write some nasty emails and phone calls with, you know, some advocating for some of our clients. And in other cases, you know, the regional business banks where you have that one-to-one relationship, you may have had a really great experience. And I've seen the run the gamut, no question. In fact, I've had to process some PPP loans for some of our clients using some of the fintech companies. So if you're still without a PPP loan and you don't know where to turn or you don't know what to do, definitely reach out to us.
Did you want to go through this one in more detail, or would you like to go to the next slide?
No. Let's talk about the PPP loan forgiveness calculation. There's just a couple of points here to keep in mind. So it requires all employers to keep very organized records so that they can pull that together and, you know, be able to complete the application. Keep in mind, we're going to have to collaborate with your payroll provider. We need to collaborate with the bank and the lender. We also want to, you know, be speaking to your accountant and, you know, whoever does your taxes. We also need to consider what spreadsheet we're using to forecast how we're using those funds. It requires a lot of that coordination to pull those pieces together, if you will. And part of what we're going to talk about is the FTE exception rule, and we're going to talk about the FTE exemption rule. And that requires employee communications that are both verbal and written and documented and kept on file. That is how, you know, we minimize loan reduction, loan forgiveness reduction, and maximize loan forgiveness. So the employee communication part of this strategy is actually very important. And Sue, we had probably a 90-minute conversation tonight with one of our clients before this webinar, speaking exactly to the strategy around this, you know, a little bit larger 150 employee company. It gets pretty complicated pretty quick.
And then I'm sorry, because it's there and we're hearing it all the time. There's a little confusion with the EIDL loan and the $10,000.
Right.
You know, they called it a grant, but so if you could just address that too.
I'll be happy to address that. So in ordinary times, for, I guess, your run-of-the-mill hurricane or your run-of-the-mill tornado that rips up a county or even a portion of the state, the emergency injury disaster loan from the SBA used to be funded at somewhere between $10 and $20 billion, enough for most typical emergencies like Hurricane Sandy or, you know, tornadoes that might sweep through the, you know, Oklahoma plains, Kansas plains. In ordinary times, that loan program was sufficient, and the first $10,000 of a EIDL loan would be considered as a grant, typically. Unfortunately, what occurred was there was something like $400 billion worth of idle loan applications sitting out there on a program that typically pays out about $20 billion. And so very quickly, the SBA got overwhelmed, and they started, you would have noticed, started restricting the $10,000 down to $1,000 maximum per employee. So if you had 5 people, you didn't get 10,000, you got 5,000. And the other thing that became confusing for, small business, everybody, was if you got the idle loan that typically was considered a grant, and if you remember, have you received your emergency idle grant? If you said yes, then that $10,000 was going to be baked into your PPP loan, and that would have been your total forgiveness. So if you thought you needed $100,000, if you had already gotten your idle loan, then that first $10,000 would have been forgiven, and then your lender would have taken that $10,000, added it to $90,000, and there would be your $100,000 forgiven. But if you got the idle grant afterwards, the lender is still only forgiving you for $100,000. So now you have an extra $10,000 to either give back without any prepayment penalty or continue to have that. So it's a little bit of an odd situation for what was supposed to be a grant on the front end for the bank then to say, well, you really got $110,000, but only $100,000 is forgivable.
Okay. Tara?
Just a couple of notes on the PPP Schedule A worksheet to be mindful of. Table 1, really what this is for is to set the salary reduction rules that can reduce your loan forgiveness. So specifically, this is asking for all employees employed at any point during your 8-week covered period or APCP, your alternative payroll covered period. And this is what will calculate your salary reduction loan forgiveness. So we're not going to include in this table 1 anybody that was earning more than $100,000 in 2019. And rather, the employees who are earning more than $100,000 in 2019 will be listed on table 2. Now, interestingly, this is the first time that I've seen the SBA single out the $100,000 as not working against the business or the loan forgiveness for purposes of salary reduction. Your 100,000 and more earners will only hit your loan forgiveness reduction calculation for the FTE calculation. So there's 2 areas you can run into a loan forgiveness issue. A is your FTE calculation, meaning if you had 15 FTEs at the time of February 15th, and when we go for loan forgiveness, if we don't have 15 and we have 10, those 5 FTEs are going to lessen our loan forgiveness. So when it comes to $100,000 plus earners, they're not looking at the 75,000 salary usage for them. They're actually just looking at making sure that they are still on your roll call for your covered period or your APCP. So that's the first time I've actually seen them differentiate the 2 for purposes of loan forgiveness. You'll also notice, and this gets a little bit complicated, as we work with our clients who are S corporations who take some salary, take some K-1 draw, gets pretty complicated with this. You'll notice that owners and self-employed individuals and partners are not added to either one of these table calculations. And if we are an S corporation that only takes K-1 or draw, technically we're not even allowed to get any forgiveness for payments we take for ourselves. We have to have put ourselves on salary and given ourselves a salary and have the records from 2019 to demonstrate that. So we're going to hit a little bit on that as well. Next slide. Sue, I'm noticing a couple of questions coming in on that last piece, and I would expect those two. Are there any questions related to that last slide by any chance?
Well, there's a bunch of questions. Why don't we just take a minute and we'll hit upon them so it'll
Okay.
encourage everybody to put
It'll
more.
be a good pause. That's
Pardon?
great.
Yep.
I think that'll
Next
be a
week-
great pause.
Yeah, next week is Memorial Day. Is a Memorial Day pay included in the PPP?
Memorial Day pay would be considered a company holiday.
Yep.
And yes, it would. Sick time, vacation, holidays. If you would ordinarily pay that time to your employees, yes, you can include Memorial Day as part of your PPP loan forgiveness.
Excellent. Next question. I had an employee that used the eFMLA in early April. I received my PPP well after he was back to work. These can both be used, I assume, since they didn't overlap.
If they didn't overlap and we're not double dipping, absolutely.
Okay, excellent. And what if a higher paid employee quits within the period of your 8 weeks?
We are actually going to get to that in a little bit. I'll answer it right now. It's on another slide, but I'll be happy to answer that right now. If a employee voluntarily resigns their position, you have no obligation to bring that person back. This is part of our written documentation plan regarding our FTE loan reduction calculation. We would want to get them under the FTE loan reduction exception, and we certainly can do that.
Okay. And what's the best way to track all your payroll costs?
That's a great question. We work inside of, we are not a payroll processor, we are an HR company. We actually work inside of all of our clients' payroll systems and collaborate directly with their payroll processor, their payroll specialist, if you will. And we pull the reports and make sure things are memo coded correctly. Make sure that we're tracking the right pay period for purposes of the PPP loan forgiveness. And we would definitely want to use your payroll as the starting point and the payroll report. Some payroll providers are very good with their reports for PPP, and then others, had to run to catch up, sprint to catch up.
Well, the other thing that we've seen, Jonathan, very often the business owner really needs to nudge the payroll company to make sure that they're tracking it for them. And since we're talking about the payroll companies, the one thing I truly encourage is make sure you have your payroll company show you how they're tracking the 6 different categories for the FFCRA, because that's another bucket that you can take money out of, and we don't want to miss it. So, just keep in touch with your payroll company and have them show you right in the system or however they can exactly how they're tracking that on your behalf. The next question, what do you do with your part-time workers? Is it just for FTEs?
That's a great question. So one of the bullets earlier on the opening slide deck, the opening slide, was speaking specifically to the FTE calculation. There's 2 options we have, and it's going to be on a later slide as well, but you either can do the true FTE calculation based on 40 hours and come up with whatever fraction that is. So if it's 0.3 or 0.5 or 0.8 FTE, you can do the actual calculation. If you prefer, you can just call every part-time employee a 0.5 FTE.
Okay. And I just wanted a clearer understanding on this. If an employee makes over $100,000 annually, they're excluded? Or is it up to $100,000 that's eligible?
So I'm going to try to clarify what excluded means. They're not excluded for purposes of FTE loan forgiveness reduction. They're excluded for purposes of you getting loan forgiveness reduction because they didn't receive 75% of their pay. Now, we got the loan application on Friday. This is a little bit bizarre. I know it sounds strange, but it's written right into the application. So for whatever reason, on the tables, it specifically does not want you to add your $100,000 earners. And if you look at table 2, it specifically doesn't ask for what you paid them, oddly enough. Yeah.
Okay. Yeah, that's so if an employees make more than 100,000 per year, do you have to calculate that during the 56-day period?
If they make more than $100,000, I mean, I guess the question is if they make more than the $15,385, that $100,000 is prorated to. And if I'm not answering your question, please reiterate or rephrase, and I'll try again. But the $15,385 per individual over the course of the covered period, that you can pay them more than $100,000, but for purposes of forgiveness, we're only going to get $15,385 forgiven.
Okay. And last question that I have right now is as an essential service provider, I had to hire new employees. Is that allowed?
Yeah, that's a great question. So when you go through Table 1, it's specifically asking you for the employees that you had during the covered period, and they are looking for the employee identifiers. So if you had them in 2019, they're specifically asking for the last 4 digits of the Social Security number to identify them, and they will be looking for them in the 8-week covered period. If they're not there, then we're going to default back to the FTE calculation, because if we didn't replace them, then the question becomes, well, you're going to take a reduction. If you did replace them, then we have a new employee and you're still going to meet your FTE calculation requirement. So even if you don't have the same exact staff, it's more important that you have the same exact FTE calculation.
Okay. And is there a prohibition against offering raises that have been earned by employees during the covered period?
That's a great question, because if you got your loan using your 2019 payroll information, it's very possible that you gave somebody or your entire staff, increases starting January 1, if that was your schedule to do performance evaluations, et cetera. There's not a prohibition or, restriction against paying employees higher than what their average monthly wages were pre-COVID. We just want to make sure that we're documenting, through your payroll records, what those amounts were. Was it because of actual hours worked? Was it, I think there's some talk about doing hazard pay. We'd actually encourage you not to pay hazard pay. We can get into that, another time. We would maybe use a work bonus, if you will, because some of your people might be getting paid for being at home because they're non-essential employees. Some are essential employees, so they're actually coming to work. So we might bump them up and give them a work bonus. There's a lot that goes on within those considerations.
Okay. We still have a few more, but I want you to get through a few more slides and then we'll come back to the questions. How's that sound?
Okay, that sounds great. We all need to be aware of the fact that when we signed this loan, we got into business with the federal government specifically because for a period of 8 weeks, we are using federal dollars to pay our employees. When we did that, we certified that we were going to, we were certifying that our business had been impacted by COVID-19. So when we do bank statements and things like that, they are looking for us to be impacted by the COVID-19. Now, I'm expecting most of our members, have been negatively impacted, but there are instances where business may have been up during this period of time. They're few and far between, but it is possible.
Right.
We also have to avoid, because we certified that we are going to use it for our payroll costs and our non-payroll costs. So we cannot knowingly use these funds for non-authorized purposes. I definitely would advise against, I heard the Venetian in Las Vegas is opening up. I would definitely advise not using it for a junket, to Las Vegas. But you know what, there's, these are loan monies, there are other business expenses. And if you knowingly use them for, a piece of equipment that's broken down and you need to fix it, they're not going to put you in PPP jail necessarily for that. the money you used for that may not be forgiven, but it wasn't playing the ponies at the track, let's say.
Right.
So just keep that in mind as we use these funds. And if you need more counsel on that, please, again, seek to counsel. We don't want anybody to get in trouble with civil penalties and criminal, felonious fraud. Especially when they come and ask questions, we all know that lying to a federal agent is normally what gets most people in more trouble than the actual crime itself. So go back.
Oh, that was my fault.
That's okay. So it happens. Verify. We also are verifying that the information we're giving to the bank and SBA for loan forgiveness is truthful. So we can't necessarily just blame the payroll processor or anything like that. We chose the vendor. So if we get in trouble, sure, we can sue them, but we're still in trouble. So we need to keep in mind the data that we are supposed to verify that we're submitting in. And then banks and lenders can submit all of your documents to the SBA for review. We already probably heard, many of us have heard, that they're no longer auditing loans. The SBA is not going to audit loans below $2 million. But that doesn't mean that if the bank or the lender sees something nefarious, they're going to say something to the SBA. And the SBA is a federal agency, so let's just be mindful of that. Next slide. So a brief summary of costs that are eligible for forgiveness. So payroll costs, non-payroll costs. The non-payroll costs, I think we already know. If this is your first PPP webinar, I'll say it for their purposes. But mortgage interest on real and personal property, not the principal. Rent on any of your commercial buildings or any lease arrangements that you have. As well as utilities, gas, phone, transportation, electric. Sometimes, depending, sewage could be wrapped up into the lease agreement or whatever and not be a separate utility. But also your other debt obligations. So if you have financing on a piece of equipment, a piece of machinery, and you're paying interest on that, we can absolutely get the interest on that forgiven. Again, not principal, but interest. So other debt obligations that we've had before February 15th. Again, we're using the paid and incurred during your 56 days. So it gives you some more flexibility, as we said earlier, to capture more days that were earned in a pay period, paid in your covered period, and then even those days that fall outside the 56th day, we can pull those days back into your covered period and get that forgiven. Payroll costs are considered pay on the day that you issue your paychecks, are distributed, and when your pay is ACH transacted. So if the check hits, it's considered pay on the registry. If the ACH clears, it's considered paid. For incurred, we know that is the days that are earned. So if your pay period is a week and you run 5 days a week, then your incurred days are 5. And we've already talked about if 2 of them fall inside your covered period and 3 fall outside, we're going to grab those 3 back so that we get more flexibility. We can get forgiveness for up to $100,000. That prorated amount is $15,345 during your 8-week period. If you have questions about the ownership, about how owners get paid, let's definitely schedule some time together. We need to count, this is pretty obvious, but we need to count payroll costs, both paid and incurred, only once. Obviously, it seems obvious, but just make sure we don't count it twice. And then all eligible non-payroll costs, those, if it gets a little complicated, but if your covered period ends and you have an upcoming rent payment, let's say on the building, we can pull, that falls outside your covered period, we can pull that into your covered period. We can't pay for 3 months of rent down the road. It's the next billing cycle for your rent, let's say, that falls just outside your covered period. We can pull that in as well. Okay?
Great. We're starting to get bombarded with questions. Would you like me to share a few with you?
Sure.
Okay. Here, well, this is a big one. 1 second, please. Okay, we have resumed operations and all employees have returned to work except for one who remains at home due to childcare issues that arose due to a spouse required to work. Instead of keeping him on unemployment, we understand it is appropriate to now compensate him through our PPP funds. As he's not physically working, he has inquired about claiming 10 hours of unemployment to continue to receive the $600 weekly bonus. I see this as double dipping and would prefer to pay him for his average 50 hours per week as opposed to a standard 40-hour work week to increase his pay and discourage the tendency to find the best deal. Can you confirm and clarify that these PPP funds are to replace the unemployment route and not to be used in conjunction in any way?
Well, you know, the answer to that is yes, yes and no. Yes, it was intended. The spirit of the CARES Act and PPP was to bring people off unemployment, put them back on your payroll, even if you didn't have work for them, which is kind of odd. It's really what, you know, socialism, you know, looks like for eight weeks. But there are, you know, every state, we'd have to look at your state's work shared program. But if your salary is reduced a certain percentage, you could qualify for both unemployment and PPP. So I would answer it this way. You can absolutely plus up that employee to encourage them to come off of your unemployment and back on your roll call. The only thing we need to be careful of is that employee being treated, let's say, differently than your rank and file employees. So we should have a conversation about the logic going behind it and make sure that it passes the smell test. But I guess the essence of the question there is, you know, you don't have to use the FFCRA to pay for the EFMLA. You certainly don't want to double dip. You can use the PPP funds to pay that person to stay home with their child. But if you're going to pay that person more money to stay home with their child than you would pay somebody who's actually coming into work, that could become an employee relations issue for you, and we should talk about that.
Okay. What about a rent payment made the week before the period began?
So rent payment, that's actually a good question. I'm going to have to research that one a little bit if it fell just before your period that began. I'm gonna have to research that, Sue. Let's note that one, and we'll get back to that member
Okay.
as you know, and get that answer.
Okay. I'm a single member S corp. I am the only FTE on payroll. I receive $8K from PPP and $1K from the EIDL. April sales were up by 40%. What would you suggest? Apply for forgiveness, or would my records show I was not negatively impacted and therefore would need to return the funds?
You know, yeah. So technically, I think we're talking to the owner there.
Yep.
Because, right, I think they're the owner of the S corporation. Sounded like they put themselves on salary, which was great because we're constrained by the salary we took in 2019, but we're not calculated in terms of being an FTE. You're not FTE 1. You're not even an FTE. You're not an employee. You're the owner of the business. The thing that gives me concern there is if revenue is up for you 40%, then throughout the entire covered period, we should have a conversation on whether or not you should seek loan forgiveness, because that I'm not thinking you would be outed by the lender to the SBA, but we did attest through a certification that our business was negatively impacted by COVID, and that may not be the case for you.
But what about the $2 million? The ruling with
the $2 million.
Yeah, if it was under
The
2
two-
million.
Well, so there's a difference between the SBA proactively auditing these loans and a lender outing us to the SBA. So we still, like, just because the SBA is not proactively auditing loans under $2 million, it doesn't mean that they're forgiving you just because they're not actively auditing it. You can still be outed by the lender for taking a loan you didn't need, that they did not clear that air per se.
Okay.
So be mindful of that.
Okay, and I need to clarify, bonus payments, are they allowed or not allowed?
Bonus payments would be allowed generally. We might need to bonus somebody or our population to get them off of unemployment. So we may need to increase wages. We are staying away from hazard pay, but bonuses might be used that way. And then you can interpret this a different way. If you had a regularly scheduled bonus that you would have given the employees, let's say for performance in 2019, and you owed them, we could show justification for bonusing them. But we do need to have the reasoning behind this. But bonuses generally would be allowed, yes.
What about lease payments for equipment utilized daily to perform duties?
That's a great question. If the lease existed before February 15th, and you can line item the interest you paid on that lease, then yes, the interest for any debt obligations that we had in place before 15th can be forgiven.
Okay. And are wages paid to part-time employees eligible for forgiveness?
Wages paid for part-time employees for loan forgiveness.
Yeah, they can be paid out of the PPP.
Part-time employees, full-time, part-time employees, they can all be paid out of the PPP and haven't been forgiven. Absolutely.
Yeah. And so can you use maintenance? Can you use the PPP money for maintenance, but it won't be forgiven, correct?
Correct. Again, I'm not really concerned about fraud there, but we are knowingly using the monies for things that are not under the payroll costs or the non-payroll costs. I think the worst thing that would happen there, I'm not a lawyer, I'm not your legal counsel, and I'm not, a tax attorney here, but I think the worst thing that would happen there is that money would not be forgiven. Not exactly fraud.
And it turns into a 1% loan for over the course of 2 years, correct?
Correct.
Okay. Leases. Does that include equipment leases? And I think you answered that before. The answer
It does. Let's just remember, though, it's not technically the principal. If we have some place where we can show the interest paid on any debt obligation, commercial debt obligation that you had before February 15th, you can have the interest for any debt obligation you have forgiven.
Okay.
For the business.
Can PPP funds be used for paying the fees, expenses on temporary employees? We have had 2 employees that are on our staff, and at least one is being hired. They were on our staff before COVID and will be on our staff after June 2020.
Well, yeah, if we mean temporary, meaning we were paying a temporary placement agency to have them work in our business, no. They are actually W-2 employees of the temp agency. So keep that in mind. We paid them company money, which is deductible, but technically they weren't on our payroll as W-2 employees. If they were on your payroll for W-2, then yes, they would be part of your payroll forgiveness.
Okay. How is profit sharing dealt with? We do a once-a-year payment. It is also paid or incurred for the year during your 8 weeks, or do you prorate it to include only 8 weeks?
Well, if we're talking about your 2019 profit sharing that you would have been distributing about now, then yes, your employer portion of profit sharing would be considered forgivable.
Okay. And how is transportation defined?
That is a great question. So generally, this is, we would call in the business unnecessarily vague. Still trying to figure out what exactly the SBA is meaning by transportation. What we're believing right now, and Sue, this, make sure we jot this special question down as well, is
Yeah.
we generally believe this is the fuel for, let's say, your delivery vans if you delivered things. So generally, that's what we think they mean by transportation, but it is an odd, it's oddly vague.
Okay. If an employee has respiratory issues like asthma and is on unemployment and does not feel comfortable coming back to work and wants to
Right.
stay on unemployment, what action should we take? Especially if the state is still in quarantine like New York. And then what happens
Yeah.
when the state goes to phase 2?
Yeah, you know what? That's the next iteration of where we are. So we really think of where we are in phases. Phase 1 was getting the PPP loans. Phase 2 was preparing and doing everything we could to get it forgiven. We're actually now really going into phase 3 with many of our clients because now we have to deal with the health and safety aspects. Some of us were essential businesses and we've been operating, but we are getting, just today, we're drop shifting all the new CDC required posters that have to go out to, businesses, plus the new OSHA posters, plus the FFCRA posters for emergency sick and emergency FMLA. So that leads us all the way into the conversation. What do you do when an employee of yours has COVID? We have to be concerned about them bringing it into the workplace. We also have to consider there's generalized anxiety and fear, and we have to be very careful to protect people with the Americans with Disabilities Act, as well as their HIPAA rights. So we don't want to take proactive measures to restrict people from coming in. As Sue, I'm really concerned. You had that issue last year. I don't know if I should bring you into the workplace. I'm actually creating a legal issue for myself by being so proactive, and no good deed goes unpunished.
Right.
In the case where an employee has general anxiety, we just need to be mindful. We've got to document that. We've got to actively listen through, what they're saying. We need to have a job description in place. We need to code the job description, essential employee or non-essential employee, and we have to consider reasonable accommodations if they're required. And they do have an obligation to come to you to disclose that and to have a doctor work with them. And we're going to have to come up with reasonable accommodations under the ADA at that point.
Okay. The next question is, can you take an employee retention credit for periods of payroll before and or after? I'm sorry, my screen moved on me. I apologize. Well, basically it was saying, I'm going to get the PPP. Can I use the ERC, the employee retention credit, for the period before I get my money? And can I use it after my money's gone?
The only way you could use the ERC is if you gave back your PPP if you got it. So then you could say, we had a safe harbor up until May 18th where we could have given the PPP back and then we could have taken ERC. We can't take both the PPP and the ERC.
Okay. And are 56 days consecutive days or business working days?
They are 56 consecutive days.
Okay. And in order to maintain social distancing, we've had some employees take personal vehicles to job sites. We have paid them mileage per IRS schedule. Are these payments forgivable? Great question.
Yeah, generally no. Expense reimbursement was not included in the payroll costs and the non-payroll costs.
Okay, so we have a
That being said, I'm going to go back to the vagueness under transportation. So keep that question asterisk because we're monitoring that.
Okay. We have the questions. If we don't get to them this evening, I'll make sure that they get answered and they get out to you. I'll work with Tom on that. Jonathan, are there a couple more slides? I think we have 5 minutes.
Yeah, let's move to the next slide, and I'll try to keep it moving at a quick pace here so that people can get more questions answered. Real quickly, this is very easy. So Full-time equivalent, we are looking at the average full-time equivalents for each week. At the end of your 8 weeks, we'll have an average of FTEs. Your FTE calculation is based on dividing by 40. So for a long time, we didn't have clarity on that. And many of us were talking about a 30-hour work week in line with the ACA. But in fact, we now know they are using a 40-hour work week. This is where this next bullet is about capping an employee at 1.0 FTE. So if they work 50 hours in a week, they're still only 1.0 on the FTE scale. You can use 0.5 for all of your part-timers if you don't want to do the FTE calculation for your part-time people. Your FTE calculation will determine your statutory loan forgiveness reduction. So on the application, it is simply asking you what was your FTE count before your loan app or at the time your loan application went in, and what was your FTE calculation at time of forgiveness. If it's lower than when you applied, you're going to statutorily get a loan reduction factor. And it will if you get maximum loan forgiveness, it's a 1.0. If it is a 0.88, that is the percentage that your loan forgiveness will be reduced. And the last bullet there is talking about the FTE reduction safe harbor. That is where if you bring all of your FTEs back on your payroll by June 30th, you will receive the FTE safe harbor exemption, and your loan forgiveness will not be reduced in terms of the FTE count. Very important if you have an ability to do that, and we can talk more about that, offline if you have questions.
Okay. Tara?
So the FTE loan reduction exception, this is important because if we have 10 employees and we furloughed all 10, we try to bring back all 10 on the payroll for purposes of PPP. If we go through the process of making a good faith written offer to rehire them, if any number of them decline, let's say 3 decline, 7 come back on payroll, we can go after the FTE exception to have them removed and not be factored into our loan forgiveness reduction. Very important that we go through that employee communication plan and document everything so that we can maximize our loan forgiveness. The second part of this is any employees during your 8 weeks who you fired for cause. So if somebody needed to be fired and you're buttoned up and documented and you're not going to get sued for a wrongful termination for cause, that's fine. They're not going to hurt your FTE calculation. If they voluntarily resigned and they're not coming back, that FTE will not hurt you either. Or if they voluntarily requested and received a reduction in their hours, we need to have all of this in writing, whether we fired them, whether they voluntarily resigned, whether they asked for a reduction in hours. And they will not be factored into a loan forgiveness reduction for you.
Okay. I have a question. Can we throw in a quick question here?
Sure. And we're coming up on the 8 o'clock hour. We'll keep running. But I want to, there's a lot of questions. So go ahead.
Yeah. The issue was a proactive application for the PPP because many of us had absolutely no idea what the future income would be. Follow up to previous question. I'm an LLC filing as an S-Corp. I pay payroll tax on myself, so I don't understand how I'm not an FTE.
For purposes of your FTE calculation, they're not including you as an FTE statutorily.
Okay.
It doesn't mean that the amounts you pay yourself under salary will not be forgiven. They're just not counting you as an FTE against all of the other, let's say, bona fide non-owner employees.
Okay. We're getting right through them, Jonathan. If you want to do, it is 8 o'clock.
Okay, hit the next slide.
Pardon?
Yeah. Hit the next slide.
Okay. And then we'll wrap up after this slide, and Tom can wrap it up
Perfect.
for us. Yeah.
Sounds good,
Absolutely.
guys.
Actually, we already hit this reduction, so let's go to the next slide. We're good on audits. This is just saying if it's less than 2 million, don't expect a proactive audit. If you have multiple entities, multiple companies that are affiliated, we just, you could be audited. Let's talk about that. And then if your loan was over $2 million, you can expect a PPP audit. That's all.
Okay.
And then that's really it. We're going to give this deck over to Tom. The last two slides here are just quick bulleted recaps of what we've talked about tonight. And the very last slide is documentation. So it's, this is the documentation that you're going to have to submit to your lender, and then you need to keep all documents, the ones that are highlighted there at the bottom, you need to keep that for 6 years. With that, that's the final slide, and I'll turn it back to you, Sue and Tom.
Okay. Thank you, Jonathan. That was great.
Yeah, I want to thank you guys for the webinar tonight. There was a lot of great questions, and you guys gave great answers and a lot of great information. I'll just remind people, we are going to have a couple of additional webinars scheduled over the next couple of weeks. We have one coming up on Friday, May 22nd at 12 p.m. with North American Training Solutions on the neuroscience of safety. And we have one on May 28th at 2 p.m. with Don Ream from E3 Solutions on leading in times of crisis. You should have received emails on both of these, but if you need the links, you can send me an email at tdunn@tcia.org, and I will get those to you.
Okay.
And Sue, you mentioned that we're going to be sending out an email to the attendees tonight,
Yes.
so that they will have your contact information.
Right. I think, Tom, what we agreed to is you supplied us your email when you registered, and the way we're going to use it is going to thank you for your attendance. But it's going to be our way of giving you our contact information. If you have any additional questions, don't hesitate. That's what Jonathan and I have been doing all day today. So we're more than happy to answer your questions and get you any information that you may need based on your business. And I really appreciate your attendance and allowing us to present to your group, Tom.
Oh, you're welcome. I appreciate your efforts tonight.
Great.
Thanks so much, Tom, and thanks to all the members.
Yeah, thank you. Have a good night.
Good night,
Have a
everybody.
great night, everybody.
Take care.
Bye-bye.
Bye-bye.